Sandra Myburgh is CEO of Fern Impact Partners, LLC, and she has a background in global portfolio selection, investment management, and she's been trading in the capital markets for over 27 years. So the topic is translating ESG into impact. Happy to have you, Sandra, and looking forward to hearing from you. The floor is yours.
Thank you, Lou, and thank you to Peter and team, and congratulations at the same time. 20 years is a very long time to talk about this topic. So Fern Impact Partners has been formed to capitalize on the expertise of the founding partners and ultimately to create a liquid equity investment vehicle for impact. And our topic today is, how do we translate ESG into impact? And obviously today you've heard of all the various versions and the alphabet around impact and ESG and the various different interpretations. For us, it's very simple. We started looking at impact as we built this business a few years ago, and to say, what is the biggest thing that we can achieve with the rest of our careers? And ultimately, that impact should not be the world's biggest kept secret. We as a founding team have decided to pledge a very significant portion of our performance fees in our managed long-short equity strategy straight for impact. So ultimately, if we can invest in positive impact themes, we utilize ESG as part of that investment process. And then thirdly, we take a very significant portion of our own profits and pledging it straight for impact. We believe we can at least put a drop into that bucket for impact. And ultimately, we still, there's $100 trillion in third or global assets under management. And if we can say what X and start asking other big firms and funders and founders what X can go straight for impact, then we are starting to make a difference. So let's take that and unpack that. Positive impact investment themes for us means everything that this world is currently grappling with, and that everything to us comes very clear if we look at it from a technical or fundamental and ESG analysis. So big picture themes, we look at clean energy, and specifically I spoke about this topic a few weeks ago. If you understand that COVID just took 3 million lives in this past year, it's quite clear to understand that clean or air pollution typically takes 7 million lives in a year. So it is very, very important to be invested in renewable energy and all the various pieces coming from that. We look at financial inclusion. We look at reducing the out-of-pocket cost of healthcare or insurance. And all of that becomes investable themes for us that we are looking, we'll take a company and we'll analyze it from a fundamental perspective. We work with a multiple of third-party data providers on ESG, and we can unpack that as well. That is a market that must be evolving to real-time data. If you think how quickly does board governance change, fastest at least on a quarterly basis, it's actually very, very slow. And as AI is helping to increase the speed of data, and companies are signing up to reduce their carbon emissions, or sensors will ultimately help us with real-time data. So we're very open to say this market must evolve quite significantly, and COVID has just come to accelerate that. And we're happy to embrace and evolve our ESG model as it evolves further. But ultimately, many times when you speak to equity managers, they'll just be so focused on the fundamental pieces. And now you get all the various groups that's focused on ESG, and they'll just be focused on that. For us, what does it mean to be invested in a company and build trust with that company over time? And so you look at it from a fundamental perspective, an ESG perspective, and also a technical analysis perspective. And that really helps to showcase the opportunities on a daily basis. To give you an example, when the trade issues with China became an issue, we started clearly seeing on a daily basis how companies that were sensitive to that were selling off first. If you think the fourth quarter of 2018, the market sold off quite significantly. But what was very interesting is that all the names in our cyber-related portfolio themes were the ones that held up the longest. And so on a short or medium or long-term basis, we can clearly see which names will come back faster or what themes will come back faster. Obviously, with COVID and really hitting markets in March last year and the big recovery trades that we've been seeing, we can clearly see by monitoring the markets, not by market size, but by these underlying themes. Immunotherapy and vaccines and clean energy were the ones that just really rallied so significantly. So all of that helps us to see clearer, to be invested, and be also very careful with that. I'm going to pause for any particular questions. Lou, are you seeing anything coming up?
Thank you very much for that. I am, let's see. I don't see any questions coming up. I can throw you this one and see if you think this is something you can address. There is one question. So given the multitude of initiatives, programs, and metrics, can you talk to the meaningful priorities in the water and energy sectors? Is this something that you think you could discuss, Sandra?
Yes, absolutely. So there's the question of hydropower versus hydrogen power. And there's very big controversies as to how hydropower is uplifting communities. If you think of the very big Three Gorges Dam project in China, versus hydrogen, which is a typical, more renewable way of looking at energy. So how do we look at that? If there's companies invested in those themes and they have liquid equity alternatives, that will enter our radar screen. And then from a technical, fundamental, and ESG perspective, we will look whether firms are either improving on ESG scores or and things such as high debt to equity ratios. So obviously hydropower projects are very, very debt intensive. You would look at the capital stack of that, and you would want to understand what is that. And to us, very high debt to equity ratios point straight to the G in governance. Right. So you can't just look at fundamentals alone or ESG alone. There's many particular things included in that. And then also from the renewable perspective, we try and look at themes that will give us new opportunities to be invested into the future. And if you think utilizing ocean wave technology, going to be very important. Satellites beaming solar back to Earth will become very important. And obviously, as companies move from private equity to liquid markets, that will come onto our radar and will be invested in. So we are keenly looking at ways, how can we invested into positive impact themes that will be impacting the world in years to come. And why do we do that? Very, very simple. I saw in 2016 a graphic by Parag Khanna in a book called Connectography, and happy to share the link on that. But that was such a stark realization of how our world will look through a climate lens in the next 60 to 80 years if it's 4 degrees Celsius warmer. And ultimately, the global south will be severely impacted. I hail originally from South Africa. My family grew up in the Namib Desert, which is it's actually the oldest desert in the world. And to understand, if you can't teach underserved communities in the global south how to be sustainable on their local footprints, our world will have a massive migration problem in the next 40, 60 to 80 years. So it's really ultimately in our hands collectively as an investment community to help change that very big ship. And think of the ship that was just stuck in the Suez Canal, how it really upended the whole supply chain and to say, what would it take to help get this ship unstuck and move in the right direction? So COVID was just a very big wake-up call. It's quite refreshing not to try and tell people that climate change is incredibly important. For us, is we just want to put head down, invest in liquid impact solutions that in themes that will be absolutely changing in the world in years to come. And as we are making profits, we pledge our very own profits straight for impact to go help those underserved communities. And how are we doing it? We created a American Friends Fund with a Belgian foundation. We selected through detailed due diligence a community transformation partner that's already working in multiple underserved communities in the townships in South Africa. And we are by no means development experts, but we are helping and enabling them to do deep impact work in those local communities and helping with trust building. And we say if it can be done there, it can be ultimately done in communities everywhere.
Wow. That's a very impactful response there. And it's, I guess, showing the interconnectivity of just all of us and everything in the world, right, that we live in. I have one more question that I'll bring up before we transition. Is there a way to quantitatively differentiate Fern's approach from other approaches? So, you know, a chance to kind of talk a little bit about how your firm's approach is differentiated from others out there.
Yes. So our approach is really incorporating everything that we have learned in markets. I grew up on a currency options trading desk at a time in the mid-90s where in South Africa, where the currency was linked to what happened in emerging markets everywhere. So the Mexican tequila crisis impacted the South Africans quite significantly, and we were just hedged the right way at the right time. So always having a risk management hat on. My career took me to New York in '98. I spent 3 years with Standard Chartered Bank in Singapore. And my whole philosophy was just to keep my learning curve as steep as possible. So not only learning about emerging markets in Asia, but also about credit derivative markets, currency options markets, and the equity markets that I so love and traded since I was a student. And it ultimately came together in the summer of '07 when my own equity portfolio took a really big knock early on in the year. And then I started making the connections that it's actually interlinked between currencies and credit and finally the equity markets. And it was this domino effect that really happened as a precursor. So in my next 7 years, I worked with Barclays Wealth, where I led first as part of a team and later helped to lead a team that invested into hedge fund assets and did due diligence on that. And then to understand the power of a seat where you as an analyst can challenge a big hedge fund manager on what they're particularly doing for impact. And at the time, the early 2011, 2012, when impact became a topic at hedge fund conferences, there was interest. And then I was just so disappointed to understand that managers would slap additional 50 basis points on top of their management fees and allocate that for impact, and then just do a simple negative screen. And hailing from South Africa, actually lived through 9/11, and to understand how fragile the human condition is, that is not impact. Is how can you ultimately make a difference beneficially and making a true impact in the world. And through being involved with HIV and to understand the big toll on the world that pandemic took, and to understand how tough it is for philanthropy to raise money in very difficult times when it's economic hardships, it's even harder to raise money there. So the idea for Fern Impact was to find a model that works, that is repeatable and scalable. So it utilizes everything that we've learned in the markets, and it's differentiating by, instead of just looking at fundamentals or ESG or technicals, we incorporated all of that into a holistic investment process that looks ahead from a macro perspective. We can have 15 to 20% of our book in macro hedges, and it helped us very well last year when markets sold off. We were positive at a time. When the market sold off deeply in March, we were positive because we were looking ahead and then being invested in these positive impact themes, utilizing ESG, and not just ESG. We look at all the controversy scores on top of it. We have analyzed a number of ESG data providers, and we've picked a provider that can give us good enough data for what we need and that we incorporate into our fundamental and technical analysis. And with that, we are competing head-on with any long-short equity manager. And we've also developed a series of long-only ESG solutions where we can't go short bad energy actors, so we'll just exclude energy names, and hence it helps with a low carbon solution.
All right, great. Thank you so much, Sandra, for all that very great commentary and insight on what you're doing. Keep up that, that sounds like you're doing great work over at Fern. So appreciate your comments and thanks for coming. And you know, the Q&A may have some questions possibly for you to take a look at, and we'll be in touch. Have a great rest of your day.
Thank you.
Take care, Sandra.